You know, a lot's happened in this first half of the year,
Yep.
but as we start to look forward and kind of anticipate some things that are out there, I mean, we've got obviously still interest rates. We still have Fed meetings coming up. We still have maybe some inflation concerns, tariff concerns, global conflicts. What are we talking about? What are we most interested in looking, and how are we navigating that with our clients and our portfolios?
Yeah, I think it's really challenging when we try to have a crystal ball of what's going forward. But let's talk about things that have momentum to happen. First, if the Federal Reserve does lower interest rates, and there's a debate if it's none, 1, 2, 3, and what the amount is, you have to think about how that impacts real estate, right? And from one area, there is pent up demand of people that would love to either sell or upgrade their house, but they're sitting in a 3 to 4% mortgage right now, and they don't want to go to a 7, right? They don't want to move. And not only from a cost standpoint, but just nobody wants to do that. So imagine the release in the real estate market from home sales standpoint with a lowering in interest rates, let alone the commercial side. Because you have the same impact on cap rates, which is how commercial real estate is valued, is through a cap rate. You have that same issue, interest rates affect cap rates. So, a lowering in interest rate will immediately relieve both the commercial, residential, industrial, all of that real estate sector. And I think it's pent up for a lot of that. The second thing is, forget the point of how it would help, the U.S. government and our debt on the interest, because that's a different topic for a different day. But small cap stocks, technology stocks, people that are borrowing, research and development, trying to grow their companies that are out there leveraged, it has a huge impact on that. So it throws this fuel on the fire of the economy that is incredible. You and I can sit here and debate as to whether or not interest rates should have already gone down or shouldn't. It is what it is, and we got to play the ball where it lies, right? We always talk about that. But I do think moving forward, as we look at the second half of the year, a catalyst in lowering interest rates would affect small cap, technology, real estate, among other asset classes. As we look at some negatives and some downside to what could potentially happen in the second half of the year, I think that we've had this unique inventory buildup. Okay, so we had the tariff scare. A bunch of people tried to pull inventory forward. Then there was no ordering for a period of time. And then I think I read something yesterday that the LA ports had a record number of inbound ships in either May or June, whichever one of those 2 months. So a big buildup again. Is that another pull forward? Why that matters? If we don't have a consistent supply chain, you have the potential of having out of stock shelves, right? And that would be disruptive. Out of stock shelves. So I think from the downside, how consistent is the current supply chain to inventories with major retailers and companies? What happens with interest rates as we move forward? And then the most concerning one is there a geopolitical issue out there that is unknown?
I agree. No, and I think anytime we come through the summer months, kind of coming into the end of the third quarter, fourth quarter, there's a lot of things, and I think we're in a really good position to be nimble and take advantage of those opportunities, as well as protect the downside should anything occur.
Absolutely. If you'd like to learn more, check out prevailiws.com.